Let's get a look at some potential commodity trades for the week ahead. And of course, we're looking out for the profits from big oil. We're joined now by Scott Bauer, CEO at the Prosper Trading Academy. Great to see you, Scott. Give us your view on WTI. Has it any prospect of getting back towards $60 US anytime soon?
You know, over the last few months or so, every rally that we've seen has been, just met head on with sellers. And even though we saw, a big drawdown in inventories last week, and we saw the Baker Hughes rig count decline quite a bit on Friday here, the overall overriding sentiment in the oil space is absolutely a matter of supply and demand, and that, demand is waning. Now, we do have questions about what's going to happen at OPEC, and are they going to decide to cut back even further at their meeting in December? However, 60 seems very, very well out of reach, barring any sort of geopolitical risk attached to the oil space.
What about gold? Gold, of course, driven by the US dollar in large measure. When the US dollar's hot, gold tends to drop. We're hearing this morning that gold is down because demand for a safe haven has gone because it seems that they're making progress on the trade talks.
Yeah, it is all about trade, and it's all about the Fed as well. And, the Fed announcement coming out Wednesday, the CME Fed Market Watch tool has a 94% chance that the Fed is going to drop rates again here. But overall, though, gold has really held up in this risk-on environment that we've seen in the equity market over the last couple weeks or so. So even with today's drop, it's still held up pretty well. But I would say that gold also, pretty much like what I was talking about with West Texas, has really reached a point where it's going to be more difficult for it to go up than down at this point, given the current state of economics here.
Sorry, give us your take there on gold again, Scott.
Yes, I think it's going to be much more difficult to get back up above 1,500, and the sellers are going to persist, and it would probably see 1,470 in my opinion.
Oh, that's interesting. So don't be looking to see it hold above or get above $1,500. Palladium, though, on fire. Of course, it's a tiny market. It's going to be volatile. Maybe, I'm not saying this now, but maybe susceptible to manipulation because the liquidity is so much less.
Well, it certainly looks as if the shorts in there have really, been taken out to the woodshed. But what it really comes down to, it's supply and demand. And right now there is a massive demand for palladium because that is what is used in gasoline-powered vehicles for emission cutting. That's what they have to use to reduce emissions. And what we're seeing is even out of China with a drop down in the demand for autos, we're seeing more and more regulation across the world in terms of emission. So there is definitely a shortfall, and that's what's driving the price up. And so far, they cannot find any real replacement for palladium. Platinum has maybe been given a thought to it, but it does not give the same properties. Platinum works for a diesel-powered engine, but not a gasoline-powered engine.
What should investors think about when they're buying into a metal like this? I suppose some of them could buy the ETF as well, PALL, if they don't want to buy the futures. Presumably get ready, you could get whipsawed in a market like this.
Well, you're exactly right. And that's what investors have to be prepared for, is that this is an extremely volatile play right now, and you have to be prepared to get whipsawed. And I would, if I were going into that space, which I am not, I would have stop orders in very, very close to the vest here.
Okay. Copper, what's your take there? Copper, again, I mean, at first glance, likely to appreciate if they make real progress on the trade talks.
Yes, it's a big if. We saw a bit of a bump, obviously, over the last few weeks with some positive talk here, but it is a big if, and it's gonna take something very concrete with these trade talks to get copper out of its own way.
Of course, one factor for Chile, for copper is Chile. Those spreading strikes, apparently Escondida again, the target of a protest.
No doubt about it, and that is putting a lot of pressure on it. And you know what? There doesn't seem to be any sort of resolution anytime soon.
Yeah, anti-government protesters there blocking access to the northern city of Antofagasta. and roads leading to BHP's Escondida mine, the giant mine, Zaldivar, and Yamana Gold's El Peñon, Yamana, one of our Canadian companies, all blocked. And that almost, I think, came out of nowhere, these Chile protests. It's such a relatively wealthy country.
Right, it really did, and you know, I'm not up to speed on government there or these protests, but again, it doesn't seem, from what I have read, like it's going to end anytime soon, and that's obviously going to put some pressure in the space.
How are you playing the ag space? Do you have any trading ideas for us there this week in hogs or soy?
You know, soy obviously has had a real nice breakout, a real nice run ever since the positive trade talks over the last couple weeks. If we do continue to get some positivity here, we could see it over $10.
We're looking there, yeah, so trading at around, the contract trading at around 922 right now.
Yep.
And so again, driven by the trade. Last thing, hogs, and of course, that's been a fascinating market. I mean, it's a given that the Chinese will have to bring in more pork, but hogs, of course, have their own supply dynamic.
Well, and look what's going on with the African swine fever, which has just obliterated, you know, the hog market, especially in China. And it's very difficult right now because there's no end in sight for the swine fever here. So there seems to be a big shortage, and China probably is going to have to start importing a lot more than they have been.
Okay, Scott, give us a favorite trading idea for this week. Is anything jumping out for you right now?
Yeah, I'd actually be short gold here, honestly. I think there's a good $20 to $25 downside even through the Fed announcement on Wednesday. I'd have a quick stop to the upside of just over 1,500, maybe 1,503, 1,504. But I think going in on the short side of gold is where you want to be.
We will leave it there, Scott. Thank you.